Hi, Dan Miller here, Miller Financial Group. I wanted to do a quick video today talking about some recent legislation that was passed in the state of Iowa regarding the Iowa state income tax. Now, I'm going to start this video out by saying that myself, Caleb, Marcus, and no one on our staff are tax professionals. And so please do not take anything that I'm going to say in this video as tax advice. And as always, you should always concur with your or talk to your own tax professional to see how any of these things might affect your individual tax situation. Also, I am going to be looking down using my notes a little bit here because there is quite a little bit to cover in this video. Well, on March 1st of 2022, Governor Kim Reynolds signed what many consider to be one of the most historic tax reform bills in the state of Iowa. Why was this done? Well, we have been fortunate in Iowa that we have been running at a surplus through our programs here in the state. And so the goal of this bill was to basically pass some of those tax savings and the value of that surplus back to taxpayers in Iowa. I'm going to touch on just the top four things here kind of from the bill and then drill down just a little bit on each of them. First of all, the primary things will be to eventually be a 3.9% individual flat income tax in the state of Iowa. Retirement income will be eventually be income tax free. There will be an exemption on net capital gains on the sale of employee awarded stock. That's coming. And then also there will be a reduction of the corporate income tax. Now, one of the things I do want to point out with this bill as we interpret it, that there will be the majority of the benefits will all be individual benefits. There are a few corporate tax benefits, but primarily they are designed for at the individual level. And at the end of this video, also I will list out the sources that we have went to for this information. So, all right. Beginning in 2023, Iowa will be reducing the number of tax brackets the state uses from 9 to 4. So beginning next year, the tax brackets will go from 9 down to 4, and the tax rates will vary from, it looks like 4.4 to 6.5%. And then what will happen from there is gradually each year, the individual income tax rate for the state of Iowa will be ratcheted down each year until in 2026, we'll have a flat rate of 3.9%. Okay, so that's kind of how that will work. And according to the governor's office, we will be one of the 10 lowest tax states. Iowa will be one of the 10 lowest tax states in the nation when we get to that point. So that's a really good place to be. All right, the next thing I want to talk about, and of course, this is something that our office works with on again, a great deal, is the tax savings on retirement income. And we think this is a huge benefit that will be available for a lot of people. Well, beginning in tax year 2023, people age 55 or older in Iowa will be exempt from state income tax on retirement income earned from the following: IRA distributions, taxable pensions, and annuities. And according to the governor's office here, and it's estimated about 290,000 taxpayers in Iowa will see their tax liability on their retirement income go away. And that's pretty substantial. And just to give you an idea of how substantial that is, in 2021, the state Iowa income tax brackets range from a high of 8.53% down to 0.33%. So, and the 8.53% is for folks over 78,000 and change in income. So if you find yourself in that place and you're drawing down retirement income, I mean, that's an 8.53% savings that will be available here in the years to come. And so we think that's pretty substantial. All right, going along with that, also there will be some tax cuts built into the bill, or there have been built in for farmers. Farmers in Iowa who are age 55 or older and who have been farming at least 10 years, so there's two hurdles that must be met, will have some benefits. that if they retire from farm operations, they will be able to collect cash rent or shares from crop production without owing state income tax on it at all. So and then there's another option out there that farmers will have if they want to sell their farmland. They can make a lifetime election to exclude net capital gains from the sale. However, they cannot do both elections. Now, there's more guidance on this coming. And again, this is one that could have some major implications for some farm families here in Iowa. So I would absolutely make sure that you talk with your tax professional to make sure that they're aware of this rule and the latest guidance on it. And again, what I'm saying is please do not take it as tax advice. I just want to pass on some of the highlights that are found in this bill. All right, and then the next part of the bill that I mentioned there is that employees, oftentimes in some companies, employees when they retire are awarded capital stock as part of an employee stock option plan or an ESOP. Well, with the new rule that it will allow a one-time lifetime election to exclude the net capital gains from one stock of one corporate or employee-owned stock ownership plan from state income tax. Now, again, that's not going to apply to everybody by any means. But if you are that employee that receives those stock options and you want to sell those for retirement income, it could have some pretty substantial benefit for you. All right. The next thing I want to talk about, I did mention there are some corporate tax benefits. Corporate income taxes are going to be able to be reduced somewhat, and this is going to be kind of an ongoing adjustment. And basically what's going to happen is that when net income tax receipts surpass $700 million, any surplus that will then go towards buying down that current top rate. Okay, so let's see here. I'm going to look at my notes. Each year it exceeds that number, a new top rate will be decided upon until there is a uniform 5.5% corporate income tax rate. So that's the goal, is to get the corporate income tax rate down to 5.5%. And then any excess tax revenue above 700 million will be put into the state's general fund to help pay for ongoing expenses for the state government. The corporate tax reform is predicted to save the people of Iowa $50 million by 2027. Now, again, that was $50 million by 2027. And remember that corporate tax savings that I mentioned earlier was $290 billion. So, or not the corporate, the individual tax savings was $290 billion, that's estimated. So there's going to be a substantial savings coming here. Now, one of the things that many people are concerned about is, okay, if we're going to collect less taxes in the state of Iowa, what's that going to do to the income and the financial situation in Iowa? Well, since the tax burden will be decreasing, their revenues are going to be going down, and it's estimated that they'll decrease by more than 236 million and by 1.9 billion by the 6th year, according to Legislative Services Agency. However, because of we've been operating at a surplus of tax revenues, the Republicans that are in the House and in charge right now believe and predict that the funds will grow and be sufficient to sustain the tax cuts. And this is assuming Iowa sees a consistent 3 to 4% growth rate, which we have been seeing here for quite some time. Now long term, we don't know, and they don't know exactly what the impacts will be. But in the short term, there's definitely going to be some tax savings for the citizens of Iowa. So again, I hope there's some good information for you to pick up, and hopefully what I do with this video is just give you the will and the desire to go out and investigate this yourself, talk with your tax professional, learn more, because again, I just kind of skimmed over the highlights here, but do know that there was some pretty significant tax reform passed on March 1st by the governor's office. and that there'll be more and more advice on that to come. And again, like I mentioned here at the end of the video, we will list the sources for this video or for the information that we passed on today. Again, my name is Dan Miller with Miller Financial Group. If you ever need anything, please don't hesitate to reach out to our office. And if we can be of any assistance in any way, we'd love to have an opportunity to visit with you. Thank you very much.